my original size, again, it wasn't the biggest bet in the world, but it was good enough. Every time we had one of these massive drawdowns, so crypto winter. And let's assume again that Raoul's a total moron. He misses the low by 30% because to market timing, this stuff is hard as hell. If I'd have just done that in the two cycles, 2013 and 2018, I would have done 25 times better because you're compounding. And that really struck me. I'm like,
this is your final chance to buy crypto before a potentially explosive rally upwards. When the true crypto bull market kicks in, it's easy to get overwhelmed. Macroeconomic expert Raoul Pal believes we are just entering what he calls the banana zone. The crypto cycle is divided into 4 distinct periods: crypto spring, crypto summer, crypto fall, and crypto winter. In 3 of these seasons, crypto is the best performing asset on Earth. However, during crypto winter, it can become the worst performing asset, sometimes falling by 80% or more. This volatility makes developing an optimal crypto strategy challenging. On the surface, it might seem simple to sell all your crypto before winter and buy when prices are down. However, in this video, Raoul explains why this isn't the best approach and how it can hinder the potential for generational wealth. Instead, he outlines 3 optimal strategies for navigating a crypto bull cycle, including when to sell. With a decade of experience in crypto and the benefit of hindsight, Raoul shares an easy-to-follow strategy that would have increased his profits by 25 times if he had adhered to it. Make sure to watch until the end of the video, where Raoul reveals his personal strategy for the current cycle and when he plans to sell his crypto. For a full deep dive, check out the first link in the description and be sure to subscribe to Raoul Pal's The Journeyman channel. Without further ado, here's Raoul on the best crypto strategy for 2024 and into 2025.
Stop, you don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
so this cycle, the 2022 downside, I didn't do anything except buy when I thought we were close to the bottom. And I started buying in June, and I got the ETH low in June. And then I bought more. And I bought some Solana in June, actually, which was too early. And then I bought again in October, November, and it worked out beautifully. And that was based around my liquidity cycle and where we are in this whole macro crypto summer stuff. And we were just finishing winter. And then I found I'd gone to my all-time highs in P&L way before the market had even got close to all-time highs. Now, it helped that I managed to nail Solana, but even then, by compounding and adding to trades into those, you do really well. For those of you who don't need the money now, then I would take that cycle, the down cycle, with utter joy and add. Expect to see an 80% drawdown. Maybe it's less this time, maybe it's more. Solana was down 97% this time. ETH was last time down 97%. And embrace it, because every time you buy those lows, you're going to 10, 20, 50x, depending on what you're buying, just of major coins, right? So it is a huge wealth generator. If you imagine Solana last year was a 10x in crypto spring. We haven't got to summer or fall yet. We're just transitioning to summer now. So if you've got a long-term time horizon, you will definitely make more money by following that route. Buy the sell-off, embrace it, have cash ready for it. Right now, we're probably in the last opportunity to put cash into the market. So if you've got cash or you're waiting, now is the last chance, because after this, we hit the banana zone and everything goes a bit crazy. And then it becomes unbuyable, and your entry levels, if we do have a bear market, then you're below water. You should not be from these levels. Or not by much anyway. These are good final levels to jam in as much as you can. Okay, so if you're the long-term person, wait for 2026 and go, yeah, I can't believe I can get more and compound more wealth. Get some cash ready for that and be ready when everybody's panicking. You be the person to stand up and say, I got money. Because don't forget, nobody has money when you bloody need to. It was hard for me to find money because cash flows have gone down, because the economy's slow, all the other things that you have to deal with. But anyway, okay, that's one route. The other route, a bunch of you say, well, I want to take everything off the table. I don't want to deal with the stress of the down markets. That's fine too, right? We all need to understand our own psychology and our behavior patterns. I can't help you with timing the top. I know that it should be, by my work, sometime in summer to winter of 2025. But when? Well, my liquidity stuff says, well, liquidity should peak in July of 2025. Is that going to be definitely right? I don't know, but directionally it's going to be roughly right because it will look like most other cycles. Generally, the cycles have peaked at the end of the year, but could that change? Remember, the last cycle was a weird one because we had this huge run up, we had a peak, we had a huge sell off, then we had another peak, didn't make much progress, and then it collapsed after that at the end of the year. The 2013 cycle was different. It was a super pump in the end, and 2017 was an accelerated pump. So of the three cycles we've had, the 2021 top was actually a bit of an outlier, but we don't know what the tops are going to look like, is my point. So how are you going to time that? Let's imagine you get out roughly right, within 10, 20% of the high or whatever. Okay, and let's say you take you've turned $100 into $1,000, and now you're waiting for the bear market. I will guarantee you will not put the same amount back in because you'll be terrified of losing it. And what you'll end up doing is sizing the position much smaller than you would have done. And you play with a negative psychology of, I don't know when to add. And before you know it, you've actually screwed the whole thing up. When if you'd have kept it and added, would have been better. So that's one thing I think most people don't realize is it could be easy to take profits. And like I did in 2017, you don't have regrets, even if it goes up more. The hard thing is actually putting the same amount back in again. It's a real psychological problem. So think that one through. I don't like that way of doing things. I think everybody's trying to be too cute. Here's my suggested path for most people, and maybe something I will do this time myself, is we don't know what the cycle peak is going to look like. We don't quite know when it's going to be. We do know it would be crazy early if it finished this year. Usually the back part of the year after the US election, there's usually a screaming pump into the end of the year. So my advice is use that in terms of time and not price. And take maybe a third off the table for lifestyle chips. Okay, now you can buy your car or your house if you're lucky or whatever it is, or some extra savings, right? Take some money out of crypto land, put it into fiat world where you live, secure your lifestyle, the things that matter to you. Right, now you've taken all of the pressure off. You've done it via time and not price, which is towards the end of the year, I'm going to take a third off. I don't really care what the price is because it will be up a lot. So I'm just going to take it off. And then now I've de-risked my life so I can now run 2025 more intelligently. So 2025, you can then run with the rest of the money that you've got, the 2/3 remaining. And you can say, okay, I'm going to take some off by about the summer. If I wanted to take more off, maybe you don't, maybe just run the rest because you've now de-risked your lifestyle. That's my favorite approach. But what I would have a tendency to do is if we do get a mega pump, the 2013-17, then take another third off when that happens. If it doesn't and it gets stunted, it doesn't matter. You've taken a third off, you've protected your lifestyle, and then you can then buy some cash with that. If you keep that cash, you can buy the dip, or you use it to, as I said, for your lifestyle chips. But this way, you're now ready for whether it stops early. You don't care because you've taken your money off the table, but you're still in the game, right? That being in the game is the secular trend. That's the most important thing to me. But if it really goes wild, you take a bit more off and you can put it into the lifestyle chips bank. And then you've still got a position. Because if you don't have a position in a secular market, I think you end up making suboptimal choices. So that's how, now you might not say a third, maybe it's 50% for you. It doesn't matter. What I'm trying to give you is an idea of not trying to nail the top, trying to think in terms of time zones and then how much lifestyle chips de-risks your life. Because I think it's too important a trend to fuck this up. So that's the best advice I can give. I will probably do the third off strategy. this time around because I've got some lifestyle stuff I want to do. I did not last time, and I was bloody happy with not doing anything but buying the dip. I will absolutely buy the dip in 2026 because this trend is going to keep going. Remember, 2.5 trillion, the 10 to 15 trillion, 15 is the pump, the 10 trillion should be normal, to 100 trillion. That's the game we're playing here. The cyclicality be your friend. Understand that there are seasons that you can use to your advantage. We are transitioning right now, and I'm talking to you, this is Sunday the 12th of May, I'm recording this. We are just transitioning where we're about to hit crypto summer. And that usually happens June, July of the season cycle. And then it goes bananas. Of course, there will be corrections and there will be sharp corrections. 30, 40% can happen, but it usually goes up into the banana zone from here. That's when you've got to be careful not to lose your mind and fuck this up doing other things you shouldn't be doing, like putting all your portfolio into meme coins because they're going up the most because you want to maximize profit. Think of this as a longer term game. You'll make plenty of money if you stay with a secular trend in the big tokens and have a small amount to play in the other stuff. The other thing that I have been doing is I've been taking some of my main bet of Solana and putting it into NFTs, which is another thesis. And this is X-Copy and people and two artists. I've bought some others, but the two artists where I think that a huge amount of that 100 trillion of wealth will end up being stored in high-end art that stays within crypto land. And I'll talk about that thesis another time. So I've been taking some profits into assets, long-term assets, but really, for me, I'll take a third off and then run the rest. I don't want to mess around with it too much. Every time I've seen anybody, the reason Jeff Bezos is the richest man in the world, or essentially, is because he never sold his stock. He didn't trade his stock; he just held on. Bill Gates, all of these people. You hold on to a secular trend; it compounds over time. And if you can buy more, buy more. But listen, that's the general idea for you. I hope that helps. Try not to time it in terms of exact price. Do it in terms of time. I like the end of the year because it's usually the end of this year because it's usually kind of pump-tastic. And you'll feel pretty decent about taking some money off. It'll feel like significant money. You won't feel like it's too early, but it'll be enough that can make the lifestyle difference. And that gives you the psychology to succeed. For those of you who really want to compound wealth, again, don't do anything and buy the sell-off. Use it to your advantage. Get cash aside, squirrel it away, save it, do anything you can so you can jam money in. Anyway, good luck out there. The banana zone is coming. It will take care of a lot of sins. Meantime, don't fuck this up.
Raoul Pal highlights the significant challenges of navigating the crypto market, particularly due to the volatility across different seasons of the crypto cycle. As we enter the banana zone, there will be unparalleled opportunities, but having the right strategy is crucial. Pal's decades of experience and insights have shown that simply selling all your crypto before the winter isn't the optimal approach. Instead, Raoul has outlined strategic ways to navigate a crypto bull cycle and maximize returns. The simplest strategy to boost your returns is to buy and hold, then accumulate more whenever crypto is 2 standard deviations below its trend. This approach ensures you compound your holdings and buy at favorable prices. If Raoul had adhered to this strategy from the start, he would have increased his returns by 25 times, which is remarkable. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.